So in the last episode, you were opening your account, your Invest Direct account for yourself, self-directed. So when you've opened it up, hopefully you've put, like I'm in Canada, so I've got a Canadian currency. Personally, I've got a GBP, which is a Great Britain pound account. You automatically get in Canada, you automatically get a US account in case you want to trade over there. Now, you also want to put in there that you want a TFSA account, right, which is a tax-free savings account. Well, that applies to Canadians. You're allowed to put $51,000 in that account at this moment in time, and every January, at the moment, under this government, you're allowed to put another 5,000 in there, or I think it's 5,500 every January. But in other countries like GB, like Great Britain or America, I'm not sure what the name of the it would be, but like a tax-free account, probably an ISA or something in England. Yeah, so they'll all do it some way or another, but you can trade stocks out of those accounts and they're tax-free. Right, that being said, moving on. Once again, I think I touched on it last time that you need a solid structure. You know, it's got to be, I say solid structure, you still need to have a little bit of flexibility. And once again, I'm going back towards the banks. They're not everything, but it's good to have a base, you know, because all money leads back to the banks. It doesn't matter if you're in business, it doesn't matter if whatever you do, your checking account, all the money, follow the money. Where does it go? It all goes back to the bank. Whether your business is set up, whatever size business you are, it all leads back to the banks. So businesses come and go, but banks, look around you, they've been there all your life. Right, now there's two companies out there, very large companies. They're global companies controlling about 3 to 4 trillion, yeah, trillion, not billion, trillion. And every bank that you would ever look at, this is just to let you know what sort of companies are investing in this. These two big companies are on near enough every profile that I've looked at. So if you want to check, ever wanted to check this, you go onto ft.com, put in the abbreviated code, I don't know, say it was HSBC, one of the largest banks in the world, HSBA, you click on, you open it and you click on profile, you run down, it will tell you the institutional shareholders. Well, you click on any bank in the world that's not private, obviously share on the stock market, any stock market in the world, you will find the Vanguard Group or BlackRock investments will be a part of near enough 99% of every bank in this in the world. They're in every bank in every country. So if it's good enough for them, believe me, it's good enough for you. So anyway, that being said, we'll leave that. Just to let you know that these massive companies, this is where all, by the way, this is where all your pensions are, this is where your people are putting your pensions in. This is where it goes. These massive companies, they're not on about billion, trillions. That's where all the pensions are going, right? You get these big companies in each individual country that is handling, you know, you think you've got a financial advisor. Where do you think the money's going? It's not, they're not individually doing it. They're passing it off to people like Vanguard, BlackRock and Vanguard are placing it, right? And they're making, say like, we'll say 5% on each company, and then they slice it all up on the way down the pipeline before it gets to you, and you only end up with a slither. So if you want it all, buy the banks yourself. And I've done that myself, and you know, it's safe and steady, right? Anyway, I'm proof that it does work. I don't only own banks, obviously. I'm just saying that to somebody starting out that's a little bit very, very wary or worried. It's an easy place to start for you. You know, you're not going to lose your shirt, and you know, because the idea of this is don't lose money. You just don't want to lose money. You just want to make money. You want to make dividends. You want to compound it. You want to keep going forward, making money. You don't want to lose money. Okay. Right, we are going to get into talking about individual stocks, and it's coming. Believe me, it is coming. This is the 4th episode I'm doing now, but the next episode we're going to be talking about, in the next episode, not this episode, we're going to be talking about Shopify, right? My son's doing option trading with it, but it is a very good stock for the future. But anyway, even though it's a technology stock, something I don't personally like, he loves them, and it is making money. I've put a few people into it. They're all making money. I'm not making money. I don't like technology, just to let you know, right? And let me just tell you why I don't like technology. I'm at an age that I've seen everything was about Sony Walkman. I'm 60 years old. Sony Walkman was the thing of the day. It was, you know, the markets went crazy over it, right? Now it's Samsung. They're the crazy one. And, you know, everybody's on about Snapchat. Well, they've lost 50% of their value in the last 12 months, at least. You know, then it was Facebook. They were losing money at the beginning, right? Fine, they're all going up and down. But what happens one day when you switch off and you say, I'm not going on Facebook anymore? Well, I'd rather personally have put my money in the bank, bought the bank stocks, or bought the railway company, or bought something that's going to be 24/7, still there and still going. It's not on a fad. It's not going to change. And it's not to say there's not lots of money in it. It's just not for me. That's just not the way I would go. I'm trying to wake up each day and say, my money's still rolling. It's still going the right way. Nobody's switched off the thing. You know, it's like cable TV at the moment. Everybody's switching it off. People don't want it. All they want is internet access now. Netflix is killing cable. What do? It's just the way it is, right? But if you've got your money in cable, it's not the place to be, is it? Anyway, so I'm just letting you know I don't like technology. Another area of sector I don't like. I don't stick with technology at all. I don't like automobile companies. Ford, Chrysler, Dodge, anybody. I don't like them. Their stocks are all, you know, 50 years ago there might have been 100 car companies, and before that there might have been 1,000 car companies. We all know that years ago there were loads of independent brands. They all got amalgamated, gobbled up, whatever, and half the time they never seem to make any money. And now you've got people like Tesla coming out with, you know, electric cars. 5 years ago nobody ever heard of them, right? Now they're about 25% bigger than Ford already, and you think, well, how can that be happening to a company against Ford in 5 years? Fantastic. I don't deal with car companies. Right, next, I don't deal with aerospace. When I say aerospace, I mean aircraft companies. Like, I don't know, any aircraft company in the world. I just don't touch them because they're very flexible on fuel costs. And I'm always watching the barrels, the oil costs, because these things dictate the value of the airline companies, and they have great trouble. I know they buy in advance and all that, but it's a problem I don't really want. I don't want to wake up each way worrying, petrol's, the gasoline's gone up $100 a barrel, then it's down to 50, then it's down to 30. All those things I've seen in my time. Many companies, good companies, seemingly good companies, airline companies, just go like that because they've bought the wrong quota of oil. And there's quite a few out there that have done this, and it's easily to go on Google and find out exactly where they've gone. They've just gone like that. So I don't do aircraft companies. That's not what I do. Right. I'm just finishing off now, and obviously if there's anything here you like, now next episode, I'm going into stocks, and we're going into Shopify. That's what we're going to be looking at, right? We're going to look a little bit in depth in there. I'll get my son to really dig into that one for us, and we'll give you some more information, and we'll look at the figures and the fundamentals. But if there's anything here that's helped you, just click on subscribe. It doesn't cost anything, and we'll see you in the next episode. Bye.